Hey everybody, Matthew here. Amazon just announced their earnings, so today we're going to dig into what Amazon just reported, what went right, what went wrong, and why you should care if you're just a regular investor even. And let's keep it simple and get right into it. Let's follow me for more, subscribe to the channel because you're going to see a lot more analysis like this. Let's get right into it. Now, Amazon After Hours is up 13% just off reporting their earnings here. And off the day, they are down 3%. So it's been pretty lackluster for Amazon shareholders here. And you could see that quick turnaround when Amazon reports phenomenal earnings or anything that's better than what people expected, what the street expected, and shareholders are getting rewarded this week by holding Amazon stock. What happened with Amazon? Revenues actually increased at about 13% year over year in Q3. This is about $180 billion of revenue. Let's look at their net income. Net income growth was at 38%. This is hitting about $21 billion. And that is insanely strong growth for the company. Many companies would wish and desire and strive to be at the same caliber that Amazon just reported today. But here's what everybody else is watching in the market. The Wall Street folks, the analysts, everyone is watching this AWS number. What are they going to report at? Everyone thought they were going to come in at 18% year over year growth. You know what? They actually come in at 20% growth. And that is an insane amount of growth given that people were just expecting 18%. When a company that hasn't moved, mind you, they are the lowest performer out of Mag 7, is reporting anything a little bit better than what analysts are expecting, you better believe this stock can move. And that is what exactly happened here. They crushed it in AWS, beating the estimates at $33 billion in AWS revenue, advertising growing at 23%, subscriptions growing at 11.5%, physical store growth at about 7% here. And this company, you probably know them for their online stores that grew at about 10%. This company is going to change the world. And if you guys haven't owned Amazon, and if you guys are thinking about owning Amazon, this is the time to be an Amazon shareholder. It is the times like this before earnings to evaluate the stock, evaluate the company, and purchase the stock. Now, if you want to see some visuals here, their net revenue is up about 13% year over year. And the way that their revenue is segmented is about 59% of it comes from North America, the US. International comes from 23%, and everything else, AWS. That is what comes out of Amazon's revenues. And of course, AWS is absolutely killing it up and to the right, like we love to see in any single company. But one thing that I do want to draw your attention to is this free cash flow number here. Free cash flows looks to be a down 69%. Nice. But this company is investing a lot of money into capital expenditures, where free cash flows have dropped to $14 billion. And just a year ago, they were at $47 billion. Now, if you look at where their free cash flow is really made up of, it's really just operating cash flow and any capital expenditures, property, plant, equipment, and any other proceeds from sales or incentives. But essentially, their number for like CapEx about is $115 billion. Now, this is the most in capital expenditures, property, plant, and equipment that Amazon has ever spent in their entire lifetime. But what investors should really be looking at now is that now that free cash flow has dropped immensely, how can the business improve? They're taking what would have been free cash flow, throwing it back into the business to try to grow in other avenues. We know that Amazon is not only just an online store or a data company or a cloud computing company or a Prime Video company. They are getting into what is called robotics, and this might be the next move. They are going to outsource a lot of their work currently within the warehouses to external robots. Robots that are going to be able to do the job just as efficient, or if not even more efficient, and create an automated process to fulfill orders. And stack things in a warehouse and pull inventory and track inventory. That is going to be the difference, because when you have 1.5 million workers that are humans, you need to, let alone pay wages, you need to pay for health insurance, you need to pay for disability, you need to pay for a lot of things that come with supporting the human race to work. And for capital efficiency, when it comes to Amazon, it makes a lot of sense because you are able to outsource a lot of this repetitive work that is going to get the company a greater return. Now, these robots, it is going to take a lot of money to create and have an established workflow that is going to be seamless for Amazon. And that is what they're working towards, I believe, to create a better Amazon in the future. So shareholders should be splendid, happy that they are driving towards bigger growth opportunities, because the one thing that you do not want to see later on is a company that just gets stagnant and a company that is complacent, that doesn't want to grow anymore. Because at the end of the day, Amazon is a growth company. If you wanted to buy a value stock, Coca-Cola is out there. Amazon is very different from Coca-Cola. So that is the free cash flow piece, and let's move on. Now, if you read through the most recent filing, you'll see that Amazon is tackling so many other avenues of growth. You can see that they have saw continued strong adoption in their Trainium 2 custom AI chip, that which is fully subscribed to a multi-billion-dollar business that grew 150% quarter over quarter. They launched Project Rainier, which is a massive AI compute cluster that is going to build and deploy within Anthropic's leading AI cloud models. And in addition to this, if I jump down here, Amazon announced a new Amazon EC2 server using NVIDIA's Blackwell superchips, designed for training and deploying the largest and most sophisticated AI models. Everything is AI in the past couple of months, past couple of years even. And if you were to mention AI, your stock would have gone up. And it seemed for a while that people hadn't mentioned AI for a while. And even if you'd mention it, the stock wouldn't go up. But now this is in the background where it's interesting that you see AI announced throughout the quarter. But I don't really think it's all this AI talk. Maybe it helps a little bit, but it's more so that AWS came on top, beat at 20% versus 18%. That is what Wall Street was looking at. That is the main driver of the Amazon growth. And all of these little plays, all of these other fantastic opportunities that Amazon has for them, these are just moonshots some of the time. Sometimes it might not even work out for them. Sometimes they're money losers. Sometimes they're like the Costco rotisserie chicken, a loss leader, to where you just get people onto your platform and then you suck them up, right? So that is what Amazon is after. Of course, they would hope, and I do hope as a shareholder, that they turn all of these projects into profitable ventures that are real life and tangible. I would want to see a Zoox self-driving car into my realm of world. I want to ride in a Zoox self-driving car, and I would take it over a Waymo because of the way that it is configured. If I am looking at my other friends as I'm driving in a car, or not driving, but sitting in a car, getting driven to the next place, then I would rather have that experience than sit in a regular car facing the back of somebody's seat. So I think Amazon has something really interesting with Zoox. Though it might not be the billions of dollars that you would assume in revenue, it just only helps Amazon, right? And what can happen later on? Amazon can get into health. Amazon can get into insurance. The opportunities are endless with Amazon. So I love Amazon, what they're doing here. This is an insane quarter, very great quarter for growth, and it seems that management is placing their bets in the right areas. NFL, right now, the Ravens versus Dolphin game is going on, and it looks like there's an absolute blowout. But why is this relevant? If you wanted to watch this game, you would click watch live. What is the reason to watch the game? It's to have Prime Video. You can only watch this game if you are on NFL Plus or have Prime Video. So in addition to Amazon's growth levers here, they have Amazon Prime, which has the rights to NFL Thursday Night Football. So if you thought that Amazon isn't part of your day-to-day life, are you watching tonight's game? Now, let us get into my Amazon position here. Amazon of the public portfolio now is about $14,000 in this portfolio, making up about 7% of this portfolio. Now, my average cost basis is about 219, and I had wished that I bought more today. In hindsight, I wish I bought more. Given that this is a blow out of the water quarter, this is a insane quarter for Amazon. It is one of the best companies in the world to own, a world-class, renowned company. But sometimes you just have to look at it and say, wow, good job. Good job to Amazon and good job to investors for picking Amazon stock. I am very comfortable with this position now. Though I wish could it have gone up more, or do I wish I bought earlier? I'm okay. It is these moments in time where I was okay with the position going in. And if Amazon would have dropped the opposite way, let's say minus 13%, I would have loaded the boat. I would have loaded the boat so hard that my costs would have dropped immensely. I had a huge buy order at 208, but I had been sitting on that for weeks. But that is okay. Sometimes when a position is already big enough to the point where you're okay with that percentage in your portfolio allocation, then it makes sense to hold it because you don't know where earnings are going to go. Is earnings going to go up or down based off the performance? You will never know because guidance will play an issue. So, given all things, given that Amazon is up 13% after hours, and given that I own the stock at $219, I am very happy with the performance of Amazon and holding the company. So, that is going to be what I'm looking for in every single company I go into. It is a company that is going to grow in every single lever and every single demographic or every single region that they touch. It has many growth levers and a management team behind it that knows how to drive the company. That is what I'm looking for. All right, folks, that is it with Amazon stock and how the quarter of quarter three went. Amazon Web Services seems to be the same exact growth driver every single quarter, giving us a little bit more this quarter. And I'm super excited to be a shareholder, and I'm super excited for all the shareholders out there. Congratulations on your wins. And if you found this content helpful, make sure that you hit the like button. Make sure you subscribe because we are growing so fast. And if you want to follow somebody who is extremely passionate about the stock market, extremely passionate about growing his portfolio, make sure that you stick around for the ride. Thank you guys so much for your time. Peace out. See you in the next one.